You're listening to the Real Estate Runway podcast, powered by Quattro Capital, where we are all about alternative business and investment strategies to help you amplify life and maximize wealth. Here's your host, the recovering engineer turned multifamily investor, Chad Sutton.
All right, Real Estate Runway family, here we are today for another episode of the Real Estate Runway podcast. I'm your host, Chad Sutton, and guys, I am an unapologetic real estate investor. I'm coming to you right now from a job site where they're demoing a room just in the adjacent wall. So here it is. If you hear it, this is real and raw. I apologize, but I don't apologize. So today we're going to talk with Imani Abdullah and Jon Stark, two fantastic young individuals I met at a mastermind. They are doing some crazy stuff out in Phoenix. They're going full cycle in their first deal where they're like tripling money in the first 2 years, something with like a $35,000 renovation budget per unit. I mean, we're talking down to the studs and start over. These guys have the experience, they have the drive, and man, are they going to be an interesting discussion here. So I'm going to jump us into the episode, and here we go. All right, Real Estate Runway family, welcome to another episode of the Real Estate Runway podcast. I'm your host, Chad Sutton, and I'm joined today with two individuals who are on fire today. One of them is Jon Stark, who is an active commercial real estate broker as well as an active value-add syndicator, and Mr. Imani Abdullah, who is a former professional athlete and a deep renovation connoisseur. This guy, has spent so much money on cost per door renovations and created so much equity. It just blows me away. They're incredible. These guys are multifamily syndicators partnered together, and they are focused on helping investors create passive income and build wealth through their apartment syndications. Fellas, welcome to the show. How are we today?
Chad, thanks so much for having us on. It's a pleasure to be here.
Absolutely. Thank you very much.
Good to hear from you guys. So what I'd love to do is kind of talk about each of you individually. Tell us who you are, so we'll start with Jon, then we'll go to Imani, and tell us how you got to where you are today. And then we'll start with this partnership you guys have formed and the power of partnerships after that. So Jon, take it away.
Okay. Sounds good. Well, I've been in San Diego for about 10 years. I'm born and raised in Southern California. Got into real estate about 5 years ago. Started with wholesaling, fix and flip houses to, investors, doing that. Worked for a nationwide company, wholesaling houses, and it was good. But I've always had the aspirations and motivations of owning apartments and creating equity and passive income. And I got into commercial real estate brokerage through a contact that I knew who was a private money lender back in 2017. He introduced me to the vice president over at Marcus and Millichap, and that casual conversation between us led to a job interview. And in 2017, I started in commercial brokerage. I got initially into office and industrial product type. I got paired with a senior mentor who's extremely successful, intelligent. He was a great guy to learn from. Great place to cut your teeth, as they say. A lot of people from Marcus and Millichap. So I worked there for about a year and a half, transferred to a firm that I'm at now, which is a local private broker owned company that has 6 or 7 offices here in Southern California. But it's great because, we have a dominant market share, but also, the ownership promotes the brokers to own real estate. And so that's been a huge culture shift from the environment over at Marcus and Millichap. And, listening to podcasts and reading books, I came across, like everyone, Grant Cardone, reading Rich Dad, Poor Dad, all the, the cliche books and podcasts, but, just realized I had to take action. And, I came across Jake and Gino, which is, a real estate education and mentorship program that I got involved with in May of 2020. That's how Chad, you and I met, and same with Imani. We can get into that too. But since then, Imani and I have kind of hit it off, and we closed on our first syndication together. He has done one prior to working with me as well, that he's about to go full cycle on early too. So I'll let him, get into some of that, the nuts and bolts. But yeah, so we actually just went under contract on another deal too. But I'll try to keep my intro and story as quick as possible. So that's kind of where I'm at and how I got to where I am now. And I'm super excited to be here.
Fantastic, Jon. I know the audience is very excited to meet you virtually here. Imani, let's do the same with you. Let's get into some meat.
Yeah, absolutely. So like Jon, been in San Diego my whole life, 24 years old, kind of have a unique beginning. Actually, my first career was a professional athlete with Los Angeles Dodgers. I was drafted out of high school, Madison High over in Claremont. So local, like Southern California boy. But yeah, like I've been around real estate pretty much my whole life. My parents just always had a good foundation, more so just like by setting an example. They both kind of started from nothing, worked up the corporate ladder. Any kind of funds they had saved, they had, always forked it over to real estate. So ever since since I could remember, I've just been around construction. I've been around real estate. I've just always had that innate idea that this was the way to go. And, it was just always so interesting how it just kind of weathered any kind of storm, any kind of, turmoil that, could be going on like in the world. But so I always had that idea. And then, when I signed, the question was like, what do I do with all this money? Obviously I don't want to spend on a car. I don't want to do this stuff or whatever. And actually the first thing that I did was like invest in a like mastermind, similar to Jon and yourself, just rub shoulders with the right people. And long story short, got inspired by a guy who, just has a massive portfolio. And just told me what he did. And then I was sold right then and there. So, kind of halfway through my career, I just made like a big decision to pivot into this. And it's been full speed since 2018. And then December 2019 contracted that building in the middle of 2019, closed December 2019. And then we're about to, like Jon said, we're about to go full cycle in like the next couple months here. It should be closing. So
that's killer.
That's it in a nutshell. I mean, there's a bunch of in between, but that's really been the past 24, 36 months, really.
That's killer, guys. And so I see how your paths have been divergent in the beginning, but now they've converged, right? So let's talk about the power of partnerships, how you guys met and what you guys are doing together now.
All right.
Yeah.
Go ahead, Imani. All right. I can jump in.
You can probably elaborate better on it, but.
Well, yeah, like I mentioned, Chad and I, both members of the mastermind, Jake and Gino, which has been just insane. It's been awesome. Just like Imani said, rubbing shoulders with everyone who has the same mindset, dedication, focus, and a lot of people who are already doing it. And that's the circle of people, excuse me, the circle of people that you want to be around. And we're broken off into smaller, what we call accountability pods. And Chad and I and 5 or 6 others get together once every 2 weeks or as often as possible. Sometimes our schedules don't align and we all have to postpone. But anyway, when Chad and I were talking, let him know that I'm really interested and focused on Phoenix. He said, you got to meet my guy, Imani. He's a young hustler. He's killing it. And before our pod even, the Zoom call even ended, he had sent an email introducing us to, and, we went and got lunch in San Diego because he also lives in San Diego as well. So we went and got lunch in, I think, November of 2020. And we've been, talking, texting, underwriting deals, going through stuff together for the last almost a year now. And we were able to get our first deal done together. My first deal as an owner operator, syndicator, Imani's second. And we're, we really like the compliments of each other in our relationship. And, we got another deal that we just went under escrow into contract on. And, the rest is history. It's been great so far. I hope Imani can say the same.
Yeah. Both of those deals are like legacy properties, but what was so interesting, it's like similar story because Chad, you still work pretty closely with Maurice, and Maurice was like kind of how Chad was to Jon, and that's just kind of how the paths crossed. I believe Chad, you and I had a Zoom conference over like underwriting.
We did.
Yeah. So, and still like took a lot of points away from that, which was really good. But yeah, it's just crazy. Just like the power of networking and just being in the right room. But yeah, after Jon and I had met, we closed on that deal in April 21st, but it was contracted like right before the holidays.
So we got favorable terms to say.
Didn't take long.
So you can just imagine how like things clicked. This like the incentives and mindsets were just aligned, and it was just full speed from day one. So we're still going.
That's the thing, guys. And for the listeners out there, whether you're looking to invest or whether you're looking to actually learn how the sausage is made and do this stuff for yourself, you got to be, you got to go to the watering holes. You got to be where like Jon said, rub shoulders with the right people, right? Because you never know which relationship is going to lead you down this path of success, because you can't do this alone. I'm here to tell you, there's so much to do here. You got to have mutually aligned partners and form a venture where you can actually and effectively implement these business plans and acquire them. I mean, acquiring them alone is a job in itself, right?
Yeah. And so much of it, there's so much content and stuff you can learn through education and through other people. But I mean, you have to implement, and just by going through the process and actually doing it teaches you so much, and so much you just have to figure out along the way. And the idea is to learn and improve upon it and streamline your systems and processes. But Chad, it might've been you on one of your podcasts that, mentioned you can only learn and know so much, or think you know so much, just by, from watching a UFC fight. But, if you're going to lose to the guy who's actually fought and never watched it. You have to get in and actually do it to fully comprehend and understand what it is that's going on. If that wasn't you, then it was someone else. But
that's so funny. I just came off mute to say that. So it cracks me up that you remember that quote.
I remember that because it resonates with me. I train Muay Thai and kickboxing, so I'm into, MMA and et cetera.
Yeah,
so,
yeah. And that's totally it. I mean, when it comes down to it, you can read everything in a book, and you're probably going to learn the 60 to 70% of what you need to know that keeps you from being out of the game on your first deal for making a mistake that big, right? You can make mistakes that will end you. And going through education and books will help you avoid those, because other people have done it and written about it. You're not going to find all the little nitpicky mistakes you'll make along the way that just make it not run as efficiently and make your life miserable for a couple of months while you fix that mistake. All that kind of stuff. Like you said, you have to do it. You have to be in. So fantastic, guys. Well, moving on to what you guys are actually doing. So I think first I'd like to hear about Imani's, previous deal that he's about to go full cycle on, because that's always an interesting conversation. What'd you get it for? What'd you do to it? What was the business plan? Give me some deets here, man.
Yeah, that one, that was a really just unique situation. And I think everyone, obviously, is everyone either looking for their first deal or who has done their first deal, they just know the barriers to entry, right? You're competing against guys who are, seasoned, sophisticated, and, just being 21 at the time, just trying to break into this market, especially Phoenix, was just it's just a whole nother story. But that deal, I'll talk a little bit about how, kind of came to fruition. So I was actually over in Tucson, looking at stuff, didn't really like it, whatever. And mind you, this is probably the dozenth trip there, just back and forth from San Diego. And actually it was really crazy because I hadn't met my mortgage broker yet. So I finally meet him for the first time, Neil Cherney. He's a vet for, the Phoenix market. And he was actually doing the refi with the owner. And after our lunch, he's like, well, this guy is refinancing his property. He's not sure if he wants to sell it. So before he locks in, 5-10-year term, I think you should go visit it because he's on the fence of selling it. And as soon as I laid eyes on it, I was like, this is it. It's this is the property. And then from there, it's just kind of been history. And he had a big prepayment. So he asked the broker to ask me if we could wait, extend escrow till December. And it just kind of fell into my lap because just in the beginning stages, you don't really have anything. You don't have a team, you don't have equity. Kind of going back to you guys' analogy, it's just you just got to jump off a cliff and just build a plane on the way down, So it's just kind of going through that. But
quote the famous movie Toy Story, that's falling with style, right?
Yeah. Exactly.
Sorry, y'all, I'm a new dad. I get to watch all the kid movies right now. So
same. So yep, I can relate.
But yeah, we ended up getting it. It was literally in the 11th hour. It was probably one of the most stressful things I've ever been through. And then I guess details about the deal. It was 2.8 million, so right around 175,000 per unit, right around $190 a square foot. And then we put in about 35,000 per door. That's inside and outside. And yeah, so now it's pretty much renovated, stabilized, and we're getting ready to disposition. So like, I don't want to jinx anything, but our strike price on that deal is around 360 to 375 a door. So
Which at what, 16 units, right, Imani?
16 units, correct.
Equates to what are you taking it out at?
So
What
right
do I wanna
around
say?
5.8 to 6 million.
Which is
So your investors are about to be really happy, it sounds like.
Yeah,
2 years.
Wow.
it's a little over a
incredible.
double.
That's incredible. And that's so, and here's the thing. Those numbers sound crazy to a lot of people like me who are in, markets on the east side of the country. But look, everything scales up. When you're doing a $35,000 per unit renovation, give me just a couple major bullets of what scope is in that renovation. What all are you doing?
Oh, I mean, just imagine a building going down to studs and saw cutting the foundation, new plumbing, new PEX, every single component. It's basically a brand new building.
So you've almost rebuilt this entire building except the stick built itself.
Exactly.
And so that's what happens when you do $35,000 unit renovations. But you took something that was probably pretty run down at $800 a unit, which by the way is pretty good rent on this side of the country. And you took it to $2,400
right
per unit. That is just an incredible value play. And investors out there, what I love about this, everyone's worried about, multifamily is inflated. The real estate market's going to crash. Well, pay attention to the deals like this, right? Where the sponsor is, I mean, I would say, 50% more rent is good, but you literally tripled rent. And, you're putting so much value add into it that the product is so different when you're done. You can't help but make money, even if the cap rate got 250 basis points worse, right? You're still going to make money on that because you've changed the NOI completely. It's not even the same.
Absolutely. And there's several, like, it's very common, the sticker shock. It's like, what are you spending? Like, how are you going to sell for that? But there's several other metrics that go into it that, where it really does make sense. What are they, what does it cost to build brand new product? Like, you should absolutely know that metric. And then what Jon and I have started to focus on is backing into the underwriting, meaning what we do is we underwrite the demographic first. We spend a lot of time and resources into the incomes of the area. And I've just always believed that no matter what business it is, the strength of your business is the strength of your customer. So like with multifamily, like the repeat part is there. You have the repeat customer, but the strength is like, can they afford the product? The product we offer is immaculate. It's just like, can we take them to that 3x income multiplier and still deliver on a pro forma with our budget? And, as long as our tenants are paying our rent and can afford it, and what you're seeing in a lot of these core areas is that, they're not buying homes. Like, they're so rent burdened. It's like, I hate to say it, but it's like they're trapped, in this cycle. But, the cool thing about our model is that we focus on the best locations. We have the best product, and we're building in our cash flow. And that cash flow figure is like arguably like the most durable in the market. It's like you're building in equity, you're building in cash flow. So, and it's just like a pride of ownership. Like the buildings that we do, it's like, I wouldn't hesitate to live in them. So it's just all around, from consumer to investor. It just makes perfect sense. And like you said, if, there was a major shift, like when you're talking going from like a 4 to a 5 or even a 6 cap rate, that's a 25 to 50% adjustment in the market. That's significant. And even with that adjustment, like, we would still cash flow. We've already, analyzed our demographic. They can still afford to pay the rent if things were to come, to correct. So
I've been extremely conservative on our reversion cap rates too, to, account for that.
So what I love about what you just said, Imani, is, I mean, do you have a mic right now? Can you pick up your mic for me and just drop it on the table? Because that was literally a mic drop moment, what you just did. What you said is, it's not about the property you're buying. That's the vehicle, and it's the market is important as well. But the whole reason we study markets is purely to understand the customer, right? You can rent something for $10,000 a month if you have enough customers that will buy it, right, repeatedly. So it has nothing to do. The economics are all driven around the sales process. What can I sell a unit that is for rent, right? What is the market going rate for it? Who's going to pay it, and how resilient is it? And you found that niche. You build it around that. I love that. So if we pivot for a second now, I mean, that is an amazing story, Imani. So, credibility box check. Good Lord, you're about to at least double and a half people's money in 2 years on that deal. So tell me about what you guys are doing together, and maybe Jon, I'll kick it over to you. You guys have now partnered up and you're working on, I think, 2 deals together right now. I mean, what do those business plans look like? And maybe sprinkle in there, you mentioned my favorite word, systems and processes. I'm going to consider that one word. How is working together, improve those for you guys?
It's been great. And especially for me, I'll say selfishly, like it really helped fast tracked my road to not only getting my first deal, but having a niche and a business plan that I feel really confident in, because my business partner does as well. And he's executing on the same strategy. So that gives me, I wish I would have met him 2 years ago and been involved on this project, but it's a lot of positive reinforcement and assurance that this is a good strategy, is proven, and it works. And as long as we're conservatively leveraged and executing on our strategy, and like the market will bear the rent that we project, and the quality that we're delivering, then I feel confident and comfortable. And so we're executing a very similar strategy on a 28 unit deal in Central Phoenix. Great location, up and coming, a lot of new development. And it's been great. We're renovating it in phases. So we have, I think, 10 or 11 units under construction right now. The contractor should have them finished and ready to release, we're hoping, by the end of October. We had a little snag with the city, but more learning obstacles and things to figure out along the way as you go. But it's going well. And we just went under contract on another 45 unit, which is in Glendale. A really up and coming area too. I mean, there's a lot of brand new Class A development there, and people that are a lot smarter and more experienced than me, which just adds more positive reinforcement to that location. So in a nutshell, I mean, that's kind of what we're working on now. Watching Imani go full cycle on this on his first deal is huge. And just to add to that credibility piece, it's coming from the brokerage side too, and just seeing Imani was able to get this relationship for us it was an off-market deal. And so the deal, I'm pretty sure, because it came from your mortgage broker. That first deal, Lindlore, his other property, was off-market. But that was, I don't want to call it luck, because when you're in the right place and you're doing the right things, you're going to get more lucky sometimes too. But on this deal, which was my first, again, his second, he had such good relationships with these brokers that when you're an owner in the marketplace, brokers are calling you every day. You already established yourself, even owning one property. And I can tell you that from the brokerage side, you're automatically, they're in your database. You're calling people that are owners in the market. So Imani has been able to develop extremely good relationships with a lot of top performing brokerage firms out there, and they'll take his call and call him back if they miss it. It's been huge. So that's how we were able to get our second deal off market. This third deal that we're working on right now it's technically on market, but there's a few things behind the scenes that didn't really make it deliverable until now. So it's kind of being, looked at as if it were an off market, because the broker, he's the one who sold Imani that first deal. He represented him on the first deal. So he's, helping pull the strings and make things happen behind the scenes to get this one done as well. But again, back to the power of partnerships for me, Imani being an owner in the marketplace and us connecting, I was able to leverage his experience and credibility and reputation just on his one deal. He has great relationships with the property managers, brokers, contractors, again, just from already being an owner in the market. And that was able to help fast track me in our partnership. And so selfishly, that really helped me as well.
Yeah, that's killer. Sorry, Imani, were you going to jump in there?
No, not at all. You hit it right on the head. And, selfishly or not, I think, Jon and I, we work so well together just because we both kind of, benefit where one falls short, or whether it's experience, but it's all full circle, so
I'm sensing some bromance. Is there like a "you complete me" bromance going on or something? Now, guys, I love what you just said, and I've been on record saying this multiple times. The value of, everyone wants to go ride these big, sexy crotch rockers, right? Everyone wants a 250 unit asset. Well, guess what? those are not going to go for lower or higher than a 5 cap. You're going to get a compressed cap rate because whoever has it probably already knows what they're doing. You're not going to find many mom and pop owners there. You do find them. I find them, right? But, if you really just look, I mean, people say that sub 100 unit assets they're harder to manage. Well, yeah, they're not impossible to manage. They're harder to manage. It's a different set of challenges, right? Go buy 2 of them. Once you got 2 or 3 of them, you got scale, you're fine. You can run it just like a big one. But you're going to find these properties, at probably much better cap rates than the equivalent 250 unit asset, especially if it has that much meat on the bone, because your broker is going to, I always say it's like buying a turkey leg at the fair. You got to give them $14 for that turkey leg, but you also got to give the guy who's dispensing it like 6 or 7 bites of that turkey leg before you can have it. Right. There's still meat on the bone. So my point is, this is a team of professionals right here, folks, who is doing the right thing. They are hunting for value where others are not looking, right? And they're finding these assets where they need so much value add, but guys, they know the demographic, they know the customer base, they know they can get it, and they've proven that. And now we're on to number 2 and 3, and I think we're just going to see them explode. So kudos to you guys. I think this is a fantastic space you're playing in. Any final thoughts on that? I know I just kind of got soapboxy there for a minute, but I love when I find people who are killing it in this space, because that's how I killed it in the beginning as well.
I would say to touch on more, I think the biggest, or I would say the best advice that, I ever got was to just like become a master at one market, like know it like the back of your hand. Like if a broker brings you a deal, like you don't need to go and see it. You should know every property around it, and you should know just everything about that pocket, especially Phoenix. It's very pocky, and secondly was just letting go of the big deal fever. Like you got to kind of just accept where you are in your humble beginnings, and just, I would love to see someone take down a 200 unit for their first deal. But I'm telling you, like with the 16 units, just the challenges of just navigating everything for your first time, kind of what we talked about before, like you can only reach so much in a book. Right. So, and then 2, kind of like what you said, like, just the smaller properties, we're in this business, for the investor. It's all about the investor. So who cares how hard it is for us? It's like, if there's an opportunity to double money, whether it's a 10 unit or 110 unit, especially in your beginning stages, like you just need to do what it takes to prove the model, because once you have that model, or better yet, a proof of method under your belt, then you're off to the races. And that's kind of like what Jon was touching on earlier. It's just like, it's just gotten so much, I don't want to say easier. It's just gotten more efficient, the more that we learn and grow together. So yeah, just kind of to summarize that, just like the big deal fever, it's in my opinion, it's overrated. Yes, it's more efficient, but in reality, when you think of it, the team that you're going to have to put together, sponsor, you're going to have someone raise funds, whatever. It's like more than likely you're going to get a sliver of that deal, or you could have a bigger chunk and be the captain of your own ship and learn probably way more than you would on a bigger deal. So, I mean, it just all ties into each person individually.
And to piggyback on that too, I mean, like Imani said, it gets easier as you go. I mean, we did our first deal together, which was my first deal. And for me, there was a lot of challenges and hurdles and obstacles. And it wasn't not that I thought it was going to be easy, but it was harder than I expected. And, after we closed, Imani said, "You thought that was hard. You should have been on my first one." So it's like just seeing it for him, how it was already much easier. I mean, I set up the Syndication Pro portal, and we did the whole onboarding and investor management through the software. They didn't have that. Imani didn't have that on his first deal. And so that was already an improvement in the systems and processes. And so for me, I'm looking forward to this his third, to make it quote unquote easier, hopefully, knock on wood.
I mean, Chad, when I say the 11th hour, I mean, like if we close at 12 o'clock, 11:58 is when we had everything we needed to close that deal.
Hey, but you used your allotted time. I mean, what do you want?
Oh my gosh. And that was already on borrowed time. Crazy.
Yeah.
But it's all worth it. So
it's all worth it. It really is. And look, I mean, you guys may be killing it right now in terms of burning the midnight oil on both sides. I mean, you're working a lot to do what you're doing, but this is the kind of stuff where you work now and it pays you dividends for years to come, right? It's not, you don't have to go work for that same money next year and the year after that and the year after that. So
like you do in brokerage, transactionals, equity is what makes you rich. you can pay the bills with transactions. So that's my goal, is to, get out of brokerage and, transition into full-time owner operator.
That's it.
I'll leave that at that.
All right. Well, guys, this has been a fantastic episode. I'm going to take us over to a couple of questions we ask every guest on the show, and I'm going to bounce back and forth between the two of you to see what we have here. So, Jon, what is your superpower in this business? If you had to pick one.
If I had to pick one, I would say it applies to every aspect of my life. I'm relentless. I won't give up, no matter what it takes, no matter how long it takes. I won't lose sight of the end goal and vision, and just got to enjoy and trust the process. So I'm relentless. I mean, I guess if you classify that as a superpower, I mean, it's just built into me as who I am. So that's just, the first thing that pops to mind.
Imani, go.
Yeah, his was more, I would say just like underwriting, and just like, just specialize in underwriting. And I would just say, I don't know, like probably, I'm trying to piggyback off.
I'll toot his horn on that, because underwriting is definitely his superpower. He built an insane spreadsheet that I've never seen, with so much coding and able to pull from this tab and this tab. I mean, I can't even explain it to the extent that this underwriting sheet he built does. I mean, pulling in average median incomes from zip codes. I mean, everything is tied to this spreadsheet. It is. So yeah, the way he analyzes deals, and this, Chad, you would be definitely impressed, being your recovering engineer, as you call yourself. I know you're really into the underwriting side too. So yeah,
I've seen his work. It's pretty impressive.
I'll toot his horn. Yeah, it's mind blowing how, intelligent and, savvy this guy is with it.
Yeah, I would just say the ability to just break down a deal, like, all the way from just like cost per foot to just anything you can think of, every single metric. Just knowing the deal inside and out. So
dissecting it, finding problems and finding value. I love it, man.
Yep.
All right. Second question, Jon, we've heard about a lot of things about why you're awesome today. What is your biggest failure, and what did it teach you? Give me a little bit of dirt here. Imani, be thinking. You're next.
Failure. Yeah. I don't know. I would imagine a lot of people would say this, but for me, finding out what I don't want to do with my life became such, I don't want to call it a failure, but it was such an opportunistic learning lesson because I was trapped in the restaurant industry for much too long, 10, 12 years, really complacent, living paycheck to paycheck, but it kind of compartmentalized me and trapped me. But finding out that I was so miserable and so unhappy in that profession, it forced me to take a risk and go for what I really want to do. So I would call it not getting into real estate sooner. However, finding out what I really didn't want to do and being so miserable and unhappy doing it, that it forced me to finally make a change.
Imani, you're up, man.
Yeah, I mean, failure, this might sound cliche, but like, in my opinion, I just feel like nothing is ever a failure. It's always a learning lesson to me. And it's like, if you told me if I could go back and change one thing, I would not change one thing. Because everything that has happened, whether good or bad, I've always learned most from failure anyway. So, every, I guess you could say, pit hole has just been a growth experience. So, in every aspect of my life too. So it's a very broad question, but that's kind of just the mindset and approach I have around that idea. So
that's fantastic, guys. Well, guys, this has been a fantastic episode. Thank you so much for coming on, sharing, your heart and where you are and what you're doing. How can our listeners get in touch with you? Because I know you're going to get a few phone calls from some investors, I think, chasing your next deal in Phoenix, if I have anything to do with it. So, Jon, maybe start with you, and then Imani go second.
Yeah. You can reach me on Instagram at stark.capital, or most old fashioned and best way is direct to my cell phone, 858-525-2446. I'm available and willing to chat anytime.
All right. Imani?
Same way. Instagram, like still setting up my business Instagram, but it's under the same name, Stark Capital. And then my direct cell is 619-888-4314. Direct cell. So yeah, old fashioned.
There it is. And guys, both email me those, please, and I will make sure they get in the show notes so these guys can scroll down and find it and click, and they're good to go. So, all right, gentlemen, thank you for being on the Real Estate Runway podcast. I'm your host, Chad Sutton. Until next time, over and out.
We hope this episode was insightful and brought value to your day. If so, please be awesome and leave us a 5-star review. Find out how Team Quattro can help you at thequattroway.com. Until next time, this is the Real Estate Runway Podcast.